Thanks, John, and thanks to everybody attending. Really appreciate it. John gave a great introduction to Troilus. Troilus is a past-producing mine. InMed operated it between 1996 and 2010, producing 2 million ounces of gold and 70,000 tons of copper. My team and I purchased it privately in 2017, came to market in 2018. And so far, we've drilled 100,000 meters, and in 2.5 short years have added 6.5 million ounces to a total resource of 8.1 million ounces, and moving towards restart. But before I flip through the presentations, we've just finished a corporate video that I am going to put up and play if everything works, and I think this platform looks amazing, so it will. And it'll probably tell you everything in about 2.5 minutes. Then I'll flip back to the slides and run you through, and then we can go to Q&A. But I think that the video as an overview gives a really good background. So I'll just let this play for 2 minutes. Well, there you go. That was the world premiere, and congratulations to our team for putting that together. Hopefully that answers everybody's questions as I flip through. I will just move through our presentation here. Just trying to advance the slides. There we go. So I'm not going to spend a lot of time on Quebec as a whole and the jurisdiction in which we operate in, because Quebec is known by all sophisticated investors as one of the best jurisdictions globally to operate, and we're seeing this absolutely firsthand. We have a very large resource, and I'll go into the history a little bit of Troilus, but certainly sitting at 8.1 million ounces equivalent, and being able to show you a plus 20-year mine life as we move through this is going to be an asset of significance in Canada. This is a picture of the old mine. That's the Z87 pit. The majority of the 2 million ounces of gold was produced in this open pit during the 14-year mine life. Went down to about 350 meters. We acquired the asset from First Quantum in 2017, privately, really when nobody was looking at the gold market in depth, and certainly not north of the Abitibi. We began trading in January of 2018. There we go. So far, we've drilled 100,000 meters of core. We actually have 4 drills going right now. We have almost 5 million ounces of indicated material, and we have just over 3 million ounces of inferred. We've made a major discovery in the southwest. Made a major discovery in the southwest, which we believe is going to have a substantial impact on this deposit going forward. The result of our new model, we've applied a new geologic model to the belt, which has resulted in 6.5 million ounces being added, led us to acquire over 1,000 square kilometers of additional land so that we can take the new model in an under or unexplored belt that's been ignored historically and garner a first mover advantage. We put out a PA in 2020 that shows a long life, and of significance. In December, we bought back our royalty from First Quantum, 2.5% royalty for $20 million. Most companies our size and at this stage in our life are selling royalties. We bought ours back. This is going to be an asset of significance going forward, and we wanted to make sure that we had an unencumbered asset. 130 million shares out. We're about $150 million market cap and about $20 million in the bank. Well capitalized. What we're very proud of is our shareholder base. We have over 51 global institutions in our name, all the major mining funds, including the large Quebec funds, and we are a Quebec company. So the support of the case, as the James Bay, SIDEX, FTQ, provides a backstop of stability on our company as we navigate cycles of volatility in the market like we're seeing now. We have a long-term value ownership. Also, insiders of the company own about 10%. I'm the largest single shareholder. Our whole company is investing in this. We bought all our shares, and we continue to actively buy in the market. Well covered by the street, and I'll just highlight Jacques Wortman at Laurentian Bank, who's one of the co-sponsors of this event today, and we're very thankful for the great coverage that we have. Last year was a really successful, call it breakout year for us. We materially outperformed the gold price, our peer groups, the GDXJ, and I really think that was a function of, one, we added a lot of ounces, and two, we put out our PA to the market, which, migrates you from an ounces in the ground story to a flag of value. What kind of deposit are you going to have? What kind of cash flow can you generate? What is your impact to the gold market? And Troilus showed very well during that time. Here is a picture taken a couple of weeks ago, but I'm actually at the site right now. With COVID, it doesn't matter where you work. We have 4 drills going aggressively with many exciting things to see. So I took this opportunity and came up to the mine, and I'm talking live from about 1 kilometer from this drill right now. Where is Troilus? We are located about 150 kilometers north of Chibougamau. You fly into Chibougamau from Montreal, Val-d'Or, you can get there from Toronto, and Chibougamau is a town of 8,000 people. It's a resource jurisdiction, so all suppliers, industrial needs, skilled labor, all logistics can be easily supplied from Chibougamau, and we can drive you to site in an hour and a half on the Route de Nord, which is an all-season highway that covers from central, or really from the 49th parallel up into northern Quebec. Great access. Here is a picture of our site. On the top right-hand corner, you see our entire 1,000-kilometer square plus land package. The blow-up is our 3 main mineralized centers today. I think we'll have more very shortly. The Z87 and the J zone is where the majority of our 8 million ounces is sitting. The southwest, like I said, is a brand new discovery. We discovered it blindly in December of 2019 with one hole. In January of 2020, we drilled 5,000 meters and in 1 month defined 600,000 ounces. We have 4 drills going. All 4 drills are on the southwest right now. We've put out some results. I'm going to show them to you shortly. And it's going to have a significant impact to this asset going forward. And then the other thing to talk about on this slide is really the 2 pits. Those are the 2 past producers. Z87 went to 350 meters, J4 went to 120. The history of Troilus, and I'm just going to touch on it very quickly. Inmet was a global base metal producer. However, certainly in the mid-'80s when Troilus was discovered, base metal companies traded at a material discount to gold operations. And at that time, base metal companies would trade at 0.6 times NAV. Gold companies were trading 1.5 times NAV. So Inmet wanted to garner that gold multiple. So they went forth to try and find a gold mine, and they did through a series of actions. Jump forward, corporate objectives were elsewhere. They focused on Cobre Panama, which is now the 4th largest gold copper mine in the world, La Cruces in Spain. So Troilus was always an undercapitalized mine, underinvested mine. Very little money was spent expanding beyond the reserve. And as such, when the mine shut down, the reserve was exhausted. No money had been invested. Gold was out of favor, and Cobre Panama was the asset of the day in the world. First Quantum took over Inmet hostily, and Troilus was put on care and maintenance. What we're left here was an exhausted reserve that had not been drilled out. The inferred had not been drilled out, and exploration hadn't been commenced. So we have 30 million cubic meters of water. I'll deal with that right now. We have completed an EIA. We've had all of our stakeholder consultations, and about 6 months ago, we received our permit to dewater, which, as everybody knows in the mining space, water is your single most sensitive issue. We are going to be dewatering in the spring, or started dewatering. We bought a water treatment plant from Newmont at Eleanor. It's installed between the 2 pits. We have all the pumps and piping. So critical path for us, and we're going to start at the Z87 pit. Here's our resource growth. I have other slides, but the more we drilled, the more we find. We step back from the historic reserve. We've put a new model that I'll talk about, and that new model has generated 6.5 million ounces in 2.5 years. I don't know of any company that's been able to do that. And our finding cost right now is well below $5 an ounce compared to the market average of about $175 an ounce. Visually, this is the best representation. What we inherited is about 200,000 ounces under the J5. There were 2 pits, J5 and 4. They're now 1 pit we call the J zone. And there's about 1.8 million ounces under the Z87 pit. 1.8 grams per ton, 50 meters wide, 1.2 kilometer strike length, very analogous to Goldex of Agnico. That's what we came to market on. We knew, however, on our DD and all the work that we did, is that this deposit had been incredibly poorly drilled. And so over 2 years, we drilled 100,000 meters. That's kind of where we are today. And we've now defined 6.5 kilometers of mineralization, down to at least 500 meters in open pits and below an 87. And all the white you see around the red is a function of us not drilling. We haven't got there yet. And I think some of the slides will represent the opportunity well to you. So what we were able to do in August of last year was put a PEA around it. And the PEA is important because I'm spending your money. I'm spending the shareholders' money. And for us to move to the next level, drilling to reserve, moving to feasibility studies, completing geotech work and tailing studies, capital-intensive period of a company's life. So what we wanted to make sure is what kind of mine could this be? And with the resource that we had, we were able to put together a great scenario. At $1,750 gold, so essentially where we are today, and that's also consensus analyst pricing, we have all US dollars, after tax, $915 million NPV, 30% post-tax IRR, 3-year payback, 22-year mine life, producing 250,000 ounces a year for under $350 million, at all-in sustaining costs of $850 an ounce. We were able to bring those costs down significantly after we bought back the 2.5% royalty in December as well. Just a couple seconds on this slide. You can see our mine layout on the bottom between the 87 and J zone and the southwest pits, and up top is our production profile. We produce gold, silver, and copper. Certainly silver and copper in vogue right now. We produce for a 14-year open pit, transitioning to an underground bulk tonnage deposit. This maximized our NPV. We produce 35% of our gold comes out by gravity. The remaining goes to a copper, gold, silver concentrate, which will go to Glencore's Horn smelter. This is our PA. This was a conceptual model based at the time of our engineering and maximizing what we've known at that time. That was in August of last year. As I said, we have 4 drills sitting on the southwest right now. That we put out some press releases I'll show you in a second. That's expanding materially. The underground is great. There's lots of value. But what we're going to do during our pre-feasibility, which you'll see in Q3 of this year, is we're going to decouple it, put it on the shelf, and we believe we're going to be able to show you a 20-year plus open pit mine at 250,000 ounces a year, which has substantial implications going forward. Oh, went too far. So a little bit of a cheeky slide. We assume that Troilus is at full production today and that nobody else brings any of their assets in Canada into production. But the purpose here is to show you where we sit. And Troilus sits as a top 10 producer in Canada at 250,000 ounces a year for over 20 years. It's an asset of significance on the order of Malartic, Detour, Pretium, Agnico's LaRonde, Agnico's Meadowbank. Great asset, long life, of interest. And then on the cost side, it plots incredibly well. And the reason that we can come in so low is really based on what I show you here. This is our site. We have 40 kilometers of road production ready. No further capital required. 60 kilometers of power line, upgraded by Hydro-Quebec, production ready. We get power at 3.2 cents a kilowatt hour. Fully upgraded substation. We have our construction camp in place. Full septic, sewer, and water for both where the operational camp will be built and where the construction camp is. And probably most importantly, the earthworks are done. And underneath those pictures is a 6.5 square kilometer fully permitted tailings facility. All of this infrastructure is production ready. And if we were to build it from scratch today, it's about $350 million US. If we were to build it from scratch, not only would we have to spend the $350 million, we probably have 3 years of permitting behind us as well. So what we need to bring in is the fleet, the mine camp, and build the mill, as well as some pre-strip. So that's why we're able to build what would be a $900 million mine like IAMGOLD's Côté and others for $350 million or less. This is a slide which I love. It's basically production versus capital, and I love it because we plot so well. The capital intensity per production ounce of Troilus is very low. And then if you move towards my favorite slide, which we stole from our friends at Integra. And I'll leave this for you to go through, but really if you take global precious metal assets, you look at recent engineering studies, you look at scale and jurisdiction and capex and eventual output, Troilus plots among the best assets in the world as far as pinpointing value, and with some of my favorite companies as well, all of which are great assets, great teams, and are going to be great mines, I think, going forward. Geologically, and I won't spend a lot of time on the model, but I do have to give a shout out to our team. We inherited Troilus with a stratigraphic model, and what that means is the gold is hosted in this one rock type. But the Abitibi, 250 kilometers to the south of us, has produced over 200 million ounces of gold, one of the most prolific gold belts in the world. We're the same rocks, the same age, the same metamorphic grade. The main difference being is that we're buried under 10 meters of till where they're exposed. And our team said, you know what, this isn't really a stratigraphic. The diorites which host the deposit are great traps, and we understand why the gold's there. But the Abitibi is structurally controlled. Big elongated structures, associated veining hosts the gold. The moment that we applied that model to our inherited resource at Troilus, we added 6.5 million ounces. So before we went public with these results, we went and staked 1,000 square kilometers and said, let's apply this to the rest of the belt. And so let's look at the mine scale first. Here is our resource and our pit shells as it is now. The blanks, the open areas, are a function of we're a brand new company. We haven't got there yet. We're drilling as fast as we can. The Southwest is a major new zone for us. We are now drilling aggressively 400 to 600 meters off the edge of Southwest, where geophysics show continuity, geochemistry and soil show continuity. We are making a big deposit bigger, which is going to add value to our shareholders for the future. And here's an example of what we're showing. If you can see the black lined outline, that is our pit shells for the Southwest. Again, 600,000 ounces that we defined a year ago. We've put out these results, and what we're finding is exactly what we expected to find. Large swaths or large sequences of low to medium grade gold with these pinching and swelling intermediate graded veins within. And so you can see how the pit shell is almost completely mineralized. And these are all step outs away from the main or pit shell that we have. So very exciting. I expect growth. Then we've drilled some really high grade. Troilus has always been a circa 1 gram ore body. So lower grade bulk tonnage type of deposits like Malartic and Detour and Young-Davidson Underground and others. However, we put these out in 2019 when we drilled them, but the market wasn't concentrating on gold at the time. 20 meters of 4 grams, 42 meters of 3, 7 of 20, some of the highest grades ever drilled in our belt. And what we found is that there's a cross-cutting event to the main deposit, bringing high grade in. This high grade persists across the whole deposit and the belt and the district. And it's not only identifiable, but we can replicate it and we can now predict it. And what this means is a better deposit at the end of the day as we move towards production. Then what we did is we took these results and this new model and we applied it to the belt. And COVID gave us the opportunity to start slow, not fill up the camp at once until all the protocols were in place. And we have a 75-man camp, but let's get out on our new ground. We completed 23,000 line kilometers of airborne, and we started to prospect along brand new logging roads in a district that hadn't been looked at in 60 years. And with our new model, we've made some major discoveries. Beyan is 8.5 kilometers southwest of our southwest zone. You can see a picture of it there on the left. From boulders to subcrop to outcrop that we cleared with the bulldozer, we have 4 trenches, 250 meters long, grading between 2 and 12 grams per ton. Very high grades, same stratigraphy as the main mine on the road. Goldfield boulder zone, 50 kilometers away from the mine. Same thing, new outcrops between 4 and 26 grams per ton. These are zones that had never been identified before. New model, new areas to look, modern techniques for the first time in 15 years showing success. And then Testard, which is right kind of south of the mine, brand new outcrops, 6-ounce gold, 60-ounce silver, 4.5% copper in outcrop. These are the highest grades ever pulled out of the belt in history. We've identified them over a 300 by 300 meter area. Ground geophysics and geochemistry are done, and we're just waiting to get a drill on it in the spring. Absolutely great new discovery by the team. Early days for all these, but what it shows you is one single important thing. Troilus is not a deposit. Troilus was an asset that was underinvested, that is growing materially and quickly. And then the belt, the Troilus belt, as everybody calls it, is not just one asset. There are a series of opportunities and projects that need a lot more work and a lot more capital spent. So we think that Troilus is going to be around for a very, very long time in one form or another. And then sustainable development. I'm sure that a lot of companies you talk to today talk about sustainable development, ESG, CSR programs, social license. When we formed this company 3 years ago, we made it our #1 priority. We had a brownfields operation. We had an existing tailings pond. There was an environmental liability. And going forward, we said social license is the single most important thing. You can have the best asset in the world, but if you don't have social license and you are not doing the right things for your stakeholders, your communities, and the environment, you're never going to have an operation. So we put a team together made up of great professionals that took this on as their mantra. And Quebec put in place right around the same time, with the same mind frame, Ecologo. And Ecologo is a government-sponsored certification for best practices in ESG. We're very proud that we were the first company in Quebec to receive the certification, and that was recognized at the AMQ Awards, where we beat out Cisco's and others for the Sustainable Development Award. And so everything we do is based around these principles, and we take it very seriously. And then stakeholder engagement. Mistissini is our local First Nations community. They have a long history with Troilus. Troilus operated, as I said, a number of times for 14 years. Mistissini was their partners. They signed the first impact benefit agreement as part of the James Bay Accord, and it was a 14-year success. So when Troilus shut down, a lot of the skilled Mistissini and First Nations workers went to the other mines in Quebec. When we took over, we quickly signed a pre-development agreement with Mistissini, and 25% of our employment is First Nations. And we inherited a great working relationship. So as such, and as part of our ESG program and social license, we're actively participating with our communities, and they're our partners. So milestones, what are you going to see from us? Because I've spilled a lot of information to you. We're drilling 7,000 meters a month right now. We have about 15,000 meters of core backlogged in the labs. You've probably heard over the course of the day how labs in Canada and the US are backlogged, which is great for the industry. It shows you we're drilling. Every week or two, we're going to be putting out results as we expand the Southwest, as we expand the J zone and Z87. New metallurgical work coming in, which is proving not only our assumptions in the PEA and what was done historically, but making it better with new and modern techniques. And this all culminates in a pre-feasibility Q3 of this year. We have a number of other things coming, but certainly we're going to continue to de-risk this asset and moving towards a producing operation. So from pre-feasibility, we'll go to feasibility. We're working through the permitting infrastructure, which we have to, and hopefully be in a production position in a couple of years in 2023. Just to sum up, we think, and it's been proven, that Quebec is one of the best jurisdictions to work in the world. Our PA sets the framework for what we will keep doing, spending you and our shareholders' money. We're a large resource and getting bigger, and this has impact not only in the production landscape of Canada and North America, but in the reserve cliff that we're seeing all the majors approaching. It's easier to buy ounces. We've shown and proven district scale exploration potential, and we're excited to show you what else is to come from that. Our team's done it before. We're building a great team, not only for exploration and development, but we're building a team to build and operate. And for me, that's the single biggest thing. Our great shareholder base has allowed us to maintain a strong balance sheet as we do this. And that's really it. I hope between the video and the slides, I was able to give you a great overview of what we're doing at Troilus. And I will leave it to questions now.
All right. Well, thank you, Justin, for a really great presentation. Got a lot of gold there. Looks like more to come. So I'll start right out. I submitted this question, or it's in my name, but it was actually submitted to me anonymously. I don't think they meant to, but anyway, just a comment. It looks like Troilus has an extremely low trading volume for their market cap. Analysts are only in Canada. They were just asking why no U.S. analyst interest, and maybe follow up. Is there plans in the works to get, to drum up that interest?
That's a great question, and then probably one reason why we're here today, John. But we have an over-the-counter OTCQB listing, so you can trade and clear in the U.S. That was stage one. We're a $150 million market cap. As we grow a little larger, and I think that's going to happen fairly quickly. You've seen the rapid growth. We absolutely will be looking for opportunities in the U.S. What you do find, though, is that the Canadian brokers, especially Canaccord and Stifel, they are U.S. presences, and certainly Stifel as well. So there is U.S. analysts now, but as far as big board trading in the U.S., that's the next evolution of Troilus, and certainly something that's in our plan.
Okay. Question from Jacques Wortman, analyst at Laurentian Bank Securities. What is the potential that the Southwest Zone leapfrogs the past pits in the pre-feasibility study, and what would be the implications?
All right. I did not give Jacques that question, by the way. That's a good question, Jacques. I believe, and our senior VP exploration, and I'm here right now, I believe that the Southwest, from what we're seeing, has potential to be another Z87. And Z87 produced for 14 years. We are just, from discovery to today, we are 3.5 months into drilling it. So there's a lot of work left to do. But I'm now seeing mineralization over a strike length longer than Z87.
Okay. What are your exploration plans for the large Greenstone Belt package, given the recent positive results? What kind of exploration program and costs can be expected?
Good question. The question I get a lot kind of to that, John, is, hey, you've got 8 million ounces there. Why do you need to keep looking further? What I would say is that Troilus is a dual stream company. Troilus is a mine. Troilus is going to be a mine. I have no question about that. I think the rest of the belt has the potential to host multiple Troiluses. But at the stage we are in the valuation we are, and though we're well funded, my money has to go towards whatever returns capital to my shareholders the fastest. And I'm a large shareholder, right? So I'm going to say, in general terms, 95% of our capital is going to the mine. But that is always going to leave $3 or $4 million for the regional work, because I truly believe that there is a very high grade deposit in our belt that we are right on top of. I feel that Beyan could potentially add another satellite deposit. You know, if you play with a 1 gram ore body at Beyan and just assume 1 million ounces at a gram, just in general, well, to mine that and transport that 8.5 to 10 kilometers up the mine costs $24 a ton. Well, at the current gold price, you're getting $50 a ton. So for us, that's incredibly profitable rock, and a lot of our belt is within transportation distance. So we're talking about operating at 35,000 tons a day, producing 250,000 ounces a year. If Beyan came in or Testard came in at much higher grade, well, perhaps we could operate at 40 or 50,000 tons a day. You know, go to a Malartic or Detour scale and produce 350 to 400,000 ounces a year. So we're explorationists. It's an awesome model that is adding value. So we're always going to keep things interesting. And also, I'll just finish with, when you are engineering and building a mine, it's the quiet time of the Lassonde cycle in a single asset company. So what our belt allows us to do is also keep interest in the stock, show momentum, show discovery, continue adding value while we're building a mine. And so from that standpoint, I don't think we'll be your standard a single asset company.
Yeah, smart strategy, because that, you know, you're trying to avoid that abandonment phase of the Lassonde curve, right? And
exactly,
you keep putting out some, you know, market moving intercepts that at least has that momentum feel to it. Yeah. Logistically, for the Testard zone, how would it be to, I mean, it's very early days, obviously. You just have the grab and channel samples, but you can't ignore some of the grades you got there. But how difficult would it be to kind of bring that, or you know, minerals from that area and process it?
You know, I'm never going to say anything's hard, because everything can be done. But Testard is directly south of the mine, and our power line runs from the mine directly through Testard within 300 meters. So there is already a logging road that goes right down the power line for servicing. At that kind of grade, you wouldn't be mining 35,000 tons a day. You know, you could think you have your 1 gram ore body operating at the mine. You can have a smaller high grade pit or open pits or selective mining that just comes straight 10 kilometers up a road which is already built. We'd have to commercialize it, and then we can blend the ore. It'd be very easy.
Okay. Next question from Craig. Would Troilus consider moving straight to full feasibility study in the second half of 2021 for economy of raising more funding to construction?
No, Craig, great question. What I would say is Quebec is a little bit different. So the way Quebec works for permitting is the PA sets the stage to move to feasibility, but a pre-feasibility starts a number of things on the permitting side. At the pre-feasibility level in Quebec, we put in our project description. And that starts the permitting process early. And then when your feasibility is done, you're essentially permitted and you can move right in. So that pre-feasibility is going to be very, very robust, but is a necessary stage. As well, we'll be entering into IBA agreements with our stakeholders and the First Nations. And that is kind of the starting point. If we went right to feasibility, there would be an expectation of production around the corner, IBA around the corner. So for us, it gives us the appropriate time to manage expectations with our stakeholders, negotiate the right deals, and at the end of the day, you're going to get it in the same amount of time. because from pre-feasibility to feasibility is really only 6 months. The permitting process for us is going to be 10 to 12 months, where the majority of companies are going to be 10, probably 2 years. We are a fully permitted mine site. We're going to be permitting an amendment rather than from scratch.
Okay. I had a follow-up question with respect to the pre-feasibility study on my own. In the presentation, I think you mentioned drilling. You were going to do that in September. So I'm assuming the drilling program, 20,000 meters, I think it was, that you're doing in September, none of that will be in the pre-feasibility study. It'll be just based on what you have so far?
No, so we've completed 20,000 meters. October, November, December, we completed 20.
Okay.
January, we did another 7. February, we are 4,000 meters through in February already. So think of it, we will be drilling through March, probably into April, because we're accomplishing 2 things. We're moving everything at all the deposits, including the Southwest, to reserve. So we're drilling at a very close spacing. As well, we're expanding the ore bodies. And when we're expanding at a level or a spacing that allows us to go to reserve too. So I would say our cutoff for drilling will be the end of April.
Okay. Question from Brent. Justin, what drilling have or are we doing in the 3.5 kilometer zone between Z87 and the Southwest zone?
You know what? I'm going to go to a slide because it might. There we go.
Yeah. That
2.5 clicks there. So the Southwest, we are. I don't think you can see my pointer, can you?
No.
No, that's okay. We are drilling 800 meters off the edge of the Southwest zone towards 87 right now. Aggressively. We've completed B soil horizons. They work very, very well for anomalies. We've completed IP, and we've also completed all the airborne. We have targets all the way between the two. We will be drilling easily 800 to a kilometer off of the edge of the Southwest in this campaign. And then we will be filling in the rest with some very wide space holes. So let's just say in the next 3 months, you'll get an idea of what's between the two. Probably some of them sooner than later.
Okay. Question on what do you expect your cash cost to be? I believe you mentioned that in the presentation. Let's test my memory. $850 an ounce.
Yeah, it's about $850, $815 all-in sustaining costs, and that's by the World Gold Council definition of pre-tax revenue. Operating costs are about $790. For a bulk tonnage scale of economy mine like we had, it benchmarks really, really well.
Could you please discuss the important and positive impact of the current infrastructure at your sites?
Yeah, and we went through that quickly, but it's a great question. So I'm just going to. So this infrastructure, to build a 40, it's worth $350 million. To build a 40-kilometer road, we're looking at about $1.5 million US a kilometer to build. Just to put in perspective, a 60-kilometer power line, high voltage power line like we have, we're sole use 3.2 cents a kilowatt hour, $750 US a kilometer. The substation is a $25 million item. All of that is great and it's production ready, but more importantly, that tailings facility to permit from scratch today would be 3 years. So for us, it's the time value of money, and time value of money to a shareholder is dilution. Because we're not generating revenue right now. We are cash consumers, and you invest in developers because we are de-risking to the eventual windfall, and that's what we're doing. But if we just had the asset and we had none of this here, we would be an $800 to $900 million build. We would be exactly the great deposit that IAMGOLD and Sumitomo are building in Northern Ontario at Côté. We're slightly bigger, but same type of rock, same grade. They're mining at 36,000 tons a day. We're mining at 35,000 tons a day. They're a $900 million capex. And so the value of where we are, government incentives, Plan Nord, the government is there to help us. Great institutional ownership, and this inherited infrastructure lowers our cost and also lowers our delays, because your delays when you're building a mine are not putting the ore through the mill. Your delays are building in the earthworks, moving big volumes. Our earthworks are done. Our site is clear. We're just pushing back and expanding.
Okay, yeah, some clear advantages there. Maybe a follow-up question to that one with respect to cash. I can't remember exactly what you had in the bank. It was fairly substantial, but how long would you expect that cash to kind of last you before you'll have to go back to the market?
Now, good question, and we burn. This site doesn't sit there for free. Just an example, that substation, the power tariffs that we have is, $19,000 a month Canadian. We have $20 million in the bank. We have 4 drills turning. We're burning about $2 million a month right now. That's all in. So we're turning away money right now. We're turning away money at these levels. We're in no rush. I am the largest individual shareholder, and I care about dilution. We're waiting for the right money. And certainly we have a lot to get to this market before we even have to think about it. So think towards the back half of the year.
Okay. And when you say that,
no rush.
Okay. And Justin, when you say the right money, would you be looking for new investors, like new strategic investors here?
Certainly we're being shown of lots of opportunities by strategics. I do argue that with the case and FDQ and Nesta James Bay and Sidex, the big government-run pension fund money in Quebec, I consider them our strategics. They are loyal and long and do great due diligence, and they're there till the end. But Quebec also offers a lot of incentivized money for drilling. Flow through, super flow through, super charity flow through. Our last flow through deal we did, we raised at a 70% premium to market. And that money is also earmarked to go into the ground. So as a shareholder, that's the best money you can see. Your dollar is $1.70, and you know that I'm putting every dollar of that into the drill, which is de-risking you and de-risking this project. So lots of opportunities for us. We've had, knock on wood, no problem raising capital. And our shareholders have remained really, really supportive of what we're doing, and we communicate with them all the time. And so for us, I want to finish the drilling. I want to show you how the resource can expand. I want to show you what the pre-feasibility. Let us deliver what we can to you, and then at that time, the market will let us know what they want to give us to keep going, and I think it's going to be substantial, but we're in great shape.
Okay. Question here: can you comment on dewatering of the pits and the significance of that permitting?
So I think it's you're never going to get any value from this from the market. But we have 30 million cubic liters of water in those 2 pits. That's a lot of water. It's not acid generating. It's perfectly clean. We have a water treatment plant installed between the 2 pits, mainly for when we get down to the bottom of the pits and you stir up the mud, suspended solids to take out. We have the pumps in place. And we're going to pump into the lakes you see in the north. The significance is this. Water is the single most sensitive issue associated with any mining industry or mining permit. The fact is, our EIA was successful. Our stakeholders, including the First Nations, were completely supportive, and they gave us a permit to do that. You are not going to get a permit to put 2 years of water into the lake system if they don't want you to move ahead. So one, our team does the right things. We're following the best first principles We're doing the best work, and in the environment, as I talked about, the logo and ESG is forefront for us. But the support of our First Nations and the government is also documented by that dewatering permit.
Yeah, for sure. Can you comment on the importance of your institutional shareholding as you advance the project? You kind of touched on it already. Anything to add there?
No, I mean, 51, 52, depending who sold today or bought today. All I would say is that so far, when they've been there for us, and it takes some of the volatility away from us. So we've been really lucky.
Okay. You mentioned Quebec is one of the best regions for mining and investing globally. Can you share more on that? That'll probably be the last question.
Sure.
It'll have to be kind of a fast answer.
Sure. It's not Troilus in particular. So forget about Troilus. We have 25 producing gold mines within 600 square kilometers of us. They've put government subsidies in place. They've put flow-through funding in place. They've put expedited permitting and EIA in place, and all the land settlement has been done. They are a pro-development, pro-build if you do everything right, and you can't say that about everywhere.
Okay. So, Mark, I hope that answers your question. Well, Justin, thank you very much for the presentation. Really impressive project you're putting together here. Yeah, it'll be interesting to follow it. I'm not surprised there's a lot of institutional backing behind it. And it sounds like some news flow, shareholders can look forward to news flow over the coming months. And it's not just in that abandonment phase of the Lassonde curve because of the, the ongoing drilling you have.
No, John, thanks for hosting us. Thanks, Laurentian, for sponsoring. And I hope everybody enjoyed the presentation, and certainly enjoy Rick Rule next. I'm sure you will.
Yeah. Okay. Justin, if anyone wanted to reach out maybe for follow-up questions, who should they be contacting?
Contact me directly, or contact Carolyn Arsenault, who's our VP of Communications. It's all on our website. We answer all calls. You want a Troilus update, give me a call. I'll take it directly.
Yeah. And I love, by the way, that you're up at site, boots on the ground. It's great to see leaders doing that. I personally think that's important. So it's great to see.
It's our happy place up here.
Yeah. Okay. Well, everybody, again, thank you for your participation and for hanging in there. So this presentation obviously was worth the wait. And last but not least, we have our keynote speaker coming up. Rick Rule should be joining us in about 5 minutes, assuming no technical difficulties. So I'm going to end the webinar here. There will be a survey as always. So please fill that out if you can. If you would like management at Troilus to contact you for a follow-up discussion, if you answer yes to the question that asks you that, we will provide those names, your contact information to Troilus, and they'll arrange to get in touch with you as well. So thanks again, Justin, and take care, everybody. See you soon in about 5 minutes.
Thanks, John.